In this video, you will discover what are the best stocks that you can buy right now in October 2022. So we'll discover together what are the 2 top stocks that you need to keep an eye on right now. But to pick the different companies, I've based my decision on many different criteria. First, I looked at what is the current momentum of the company to know if many people are interested in it at the moment and if it has a great future ahead of it. I've also looked at their capacity to pass throughout a recession and their business model. How are they making their money and what are their different markets? Now, let's see my first pick. The first company that I'm keeping an eye on at the moment is the brand new media streaming platform Rumble with the brand new ticker RUM. This company could be compared to a new YouTube. Indeed, it is a video platform and a cloud business located in North America that was created in 2013. Just like YouTube, this company is making the biggest part of their revenue throughout their advertising, but they are also making a lot of money from their different partnerships with companies like MTV, Yahoo, and Xbox. And just like YouTube, this company is giving a certain part of their revenue throughout the different content creators, which obviously depend on how well the videos are performing. However, if a certain video is already used by a partner or is making some money throughout advertising, the creator will receive a certain share of the revenue. For example, you would be paid 90% of what this video earns on YouTube and 60% of what it makes on other different sites. But why is that company is very interesting at the moment? In fact, even if this company is pretty new compared to other big giants in this field, just like YouTube and Dailymotion, it has recently seen a massive growth in the last couple of months. Indeed, in September 2022, this company has seen more than 78 million of monthly active users on their website. This represents an incredible 77% of growth year over year. And this is slowly becoming an interesting competitor for YouTube, with famous persons like Andrew Tate and Steve Will Do It joining the platform recently because they have been banned from YouTube. For this platform, it makes that it gains a lot of different new viewers because of the introduction of those personalities. And we can see that by the introduction of Steve Would Do It in the mid-September, where the market cap of this company has exploded. Obviously, it still has a quite low market capitalization of about $3 billion, which is quite lower compared to Google, which has a market cap of over many $100 billion. But with this recent rise in the interest of many different new users of this platform, it could be the beginning of a great story for this small company, especially with the growing revenue in the video sector for the future years, and knowing the fact that currently more than 80% of the total traffic on the internet is generated from the different video sources. If Rumble is able to continue to adapt to its momentum, it could definitely fight against all the big competitors in the near future. And for the investors that would like to know what was the past performance of this company, it has generated about 20% of year-over-year return, and this is quite impressive knowing all the different events that we have seen since the beginning of the year on the market, like the high inflation, the war, and now the recession. However, if we wanted to make a fundamental analysis on this company, it could be quite hard since Rumble has just completed a business combination with CF Acquisition Corporation. And it's why about 2 weeks ago it has changed of symbol, which has taken now the symbol RUM as I told you earlier, because obviously of this merge with CF Acquisition, and the switch of ticker happened on the 19th of September. And as I told you earlier, the biggest news recently has been the coming of Steve Will Do It to produce some exclusive content on Rumble. And even if we don't have much information on the company, we see that its valuation is about currently $3 billion, and they have some great revenue of about $13 million with a massive quarterly revenue growth year over year of about 107%. This company also have a lot of cash, about $33 million compared to only about $1.7 million of debt. And another interesting point about this company is that more than half of the company is currently held by different institutions. So it's definitely a stock to keep an eye on, especially with its positive momentum at the moment. And now for the second stock that I've chosen, I've went with a giant in the tech sector, which is the oldest companies among the GAFAM. Obviously, I am talking about Microsoft with the ticker MSFT. This company, created in 1975 by a certain Bill Gates, is a tech company mainly focusing on the consumer electronics and the computer software. Microsoft is a massive company in terms of valuation that owns many different of subsidiaries, just like Lincoln, Skype, and Xbox. This company not only have a massive valuation, but it also has some massive revenue. And those are actually generated from many different income sources, just like some products and services offers to increase the productivity, just like Office 365, but also their different cloud services like Microsoft Azure and their computer products and services like the Xbox. However, they are facing some massive competition on their markets, with companies like Apple, Google, and IBM fighting for the electronic market. But why is Microsoft more interesting than its competitors right now at the moment? The first reason is the fact that at the moment this stock is down more than 30%, which is pretty much at its 52 weeks low. They've also recently announced that they were increasing of about 10% their future dividend. This makes it one of the most undervalued GAFAM at the moment with the highest dividend. And especially right now in recession time where the different stocks are losing a lot of value, the dividends could be a great alternative to counter those losses with some interesting passive income. It's also very interesting to know that their infrastructure for their Microsoft Azure has recently increased of about 40%, which obviously is showing and foreshadowing a pretty great growth for the future in that field, especially knowing that the companies in recession time are trying to adopt clearly the different cloud systems which help them with their efficiency. This sell-off could be a great possibility for you to add some of these shares that are very valuable for all the different retail investors, and at the same time to receive some potential interesting passive income from those increased dividends. Now let's take a look at what were the recent earnings and their different financial metrics of this company. In terms of their financials for the last quarter, we can see that year over year they have been able to increase their revenue, their net income, their earnings per share, and their operating income. Unfortunately, they haven't been able to increase their net profit margin, as we can see, with a slight decrease of about 10%. In terms of valuation for this company, it has a strong market capitalization of over $1.7 trillion with a great price to earning ratio of less than 25. We can also see that their profit, operating margin, and the return on assets and equity have been pretty astonishing in the past couple of months. This company also has a lot of cash compared to what is its debt. And as I told you earlier, they have recently increased the dividend that is now about 1.14% per year, with an excellent payout ratio of only 25% of their net income that is used to pay the dividends to their holders. And in terms of revenue, we can see that they have been able to increase as well their revenue compared to the last 3 years, which has also led into an increase in their earnings before interest and taxes, with some excellent news also with their different cash flow, as we can see that their operating cash flow have been increasing as well, which has led them to receive some higher free cash flow last year. As you've been able to see in this video, there are currently plenty of different possibilities on the market to buy different companies with a massive discount. Those different possibilities obviously were created by the massive sell-off that we've seen on the market in the past couple of days, which was due to the recent news of the Fed that they were increasing the rates. So if you want to understand what those news mean and how can you prepare for this massive recession that could come in the next month, well, check out the video that's going to be right over here that will explain you what is the current situation and how you can prepare. And obviously make sure to join the North family by subscribing to the channel for only $0.0, and I will see you soon. Peace.